So what exactly has fueled this meteoric rise that we've seen in the last, I'll say, what, 30 days, really? I mean,
Mhm.
last year Bitcoin was steadily climbing, but then it seems like in the last, what, maybe a month to 2 months, it's just all of a sudden taken off out of the atmosphere to
Mhm.
unbelievable heights that we did not expect to see. So what exactly
Mhm.
do you think fueled that rise in Bitcoin price?
Yeah, so there's a really good theory by Plan B on Twitter called the stock to flow model. And if you're not familiar with it, it's a little bit technical and goes into co-integration and all that stuff. But basically, his thesis is that after every halving, there's a run up in price because there's less supply, right?
Yeah,
Miners are not bringing that many new Bitcoins. It used to
yeah,
be 12. So the halving happened last May. So last year, like for the first 5 months, it was 12 and a half Bitcoins every block every 10 minutes. But then all of a sudden that supply got cut in half. And that needs to sort of make its way through the Bitcoin ecosystem. But because there's less of a supply, the
there's more
demand starts
demand.
going up.
Yep.
And the demand is, even if it stays the same, price is going to go up because there's
Yeah.
less supply. And that seems to have happened, is that this has sort of worked its way through the system, and it takes a few months. Kind of like if the Federal Reserve prints a lot of money, it takes a while for it to get through the entire economy. It's very similar. And you know, that's definitely one part of it, and the other part of it is kind of like all of the money printing that's going on. We literally had, you know, like $6 trillion or some insane. I think that M2 money stock of the U.S. dollar went from something like 15.5 trillion to 19.5 trillion,
Yeah.
which is an increase of like 25 or 35% or some ridiculous.
Sounds
right?
crazy.
Like that's,
Yeah.
yeah, that's all U.S. dollars in existence increased by like 30 something percent. That's insane, and that, you know, that has to affect everything, and it has. Like you can see it in every stock. It's going crazy because people don't want to hold dollars, right? If you're holding dollars, then you might not be able to buy anything anymore.
Yep.
So you know, people are putting it. I don't know where to put it into. All right, let's just go buy companies I know. You know, Amazon and Tesla. And,
Yeah.
you know, Microsoft or whatever, and all of that money is going there or into real estate. I hear real estate market's going crazy right now. They put it into gold or Bitcoin or whatever. So there's definitely a component of people just don't feel safe in the dollar anymore, because it's just such a terrible return, and they're expecting some form of inflation. We're getting asset inflation right now. Believe me, it'll start trickling down to you know, other things like the cost of maybe like mid-tier consumer goods, like you know, maybe like cars or
I saw a report where it says that the average price of a car has gone from 25,000 to like 28 and a half $1,000. So we're starting to see that price kind of increase a little bit over time.
Yeah, so it always starts with like the most expensive things, and this is how inflation has always worked. So like the most expensive stuff that I could think of that goes up like that is like a pro sports team, right? Like just like remember back in the 80s, like, oh, you know, this person bought the Yankees for like $15 million. Now it's like, you know, a couple billion in order to even get into the cup. Yeah, so I mean, those things have like gone up 100x. So those are the most expensive things. Yeah, so stocks and real estate and things like that are, you know, like that's another level. Yeah. And then like you know, the next most expensive stuff is maybe like college, you know, cars, things like that. Those are healthcare, you know, those things are going up pretty high. And then the very last things that go up are stuff like milk and eggs at the grocery store, or a pair of jeans, or, you know, clothes,
the
or
regular
like
items.
Yeah, but I mean, those things are coming too, right? Like those things have been increasing in price. In a sense, like they've been subsidized by the government, giving like these giant loans to, you know, the Walmarts and Amazons of the world, so they keep the prices super low. So, you know, this is what you would call bread and circuses, and this is what the Roman emperors used to do. Is they would give out bread, and they would have like you know, these gladiator fights in these coliseums to keep the populace from rioting. And
Wow.
this is a form of doing that the government does, which is subsidize these giant companies that provide these goods for really cheap, never mind your health or your nutrition or your safety or any of that. They just
stuff.
they just want to make sure that, you know, the masses aren't like out in the streets like rioting or whatever. But of course, like if the last year has shown anything, it's that you know, like the little people on either side of the, you know, spectrum are very angry and they know something is terribly wrong.
Yeah.
So, you know, I mean, knowing that, like, there, you know, a lot of people are like, okay, something is happening. I need to put it into something safe. Bitcoin is becoming one of those safe things, and that's a large part of what's happening. Is that this last year has been absolutely crazy, and you know, like, say what you will, whatever side of this political spectrum you're on, you know, something is just horribly wrong, right? Like, just something is wrong. Like, you know, you might blame it on them or us or whatever, you know, what, who cares, right? You know something is wrong. You need to be in someplace safe. Bitcoin is that place of safety. And a lot of people, especially the smart money, the people that are getting out in front, they know that it's Bitcoin.
Yeah. So I guess speaking of the smart money, we saw a press release from JP Morgan that announced that they expect Bitcoin to get over $146,000 per coin. Is that real? I mean, with the way it's been the last couple of days, it feels very realistic, but is that actually a realistic price point for one Bitcoin to get to that point? And then how does that also affect the possibility of Bitcoin becoming like a standard currency that people can use? Because one of the arguments against Bitcoin is the volatility with it, which makes it extremely hard to be able to determine, like, oh, it's worth this much for this person on this day. It's extremely hard to determine that. I mean, the dollar fluctuates and other currencies fluctuate, but not as widely as Bitcoin tends to fluctuate almost on a daily basis. And so one question, first part of that is the 146, is that even possible? And then on the other part, is this going to benefit or hamper the ability of Bitcoin to become a standard currency?
All right. So I'm going to ask you a question first and get your take on something.
Yep.
All right. So I got into Bitcoin in February of 2011. What do you think the price of Bitcoin was back then?
If I remember, it was like, what, probably 6,000 maybe?
Okay, 2011, February of 2011. You're thinking it was about.
Oh wait, no. It wasn't 6,000. Probably like less than $1.
Okay, it was $1, right? And at that point, I thought $100 was completely impossible. 2 years later, it was $1,000. So this is where Bitcoin like sort of operates on a really strange sort of like scale. If you look at the market cap of Bitcoin, it's only like $700 billion.
Yep.
That's less than a third of the market cap of Apple, for example.
Yep.
So if you think about it that way, you know, getting to the market cap of Apple is what, like $120,000 Bitcoin, right? Like that, it's not that much. So like going from like $1 to 100 is, in a, you know, like multiplier sense, not different than 100 to 10,000. Or, you know, like last year, in March of last year, Bitcoin was $3,100. Right now, it is $40,000. So it did 11x or 13x in, you know, 9 months. So it's entirely possible that it does 10x in the next 9 months too. So in which case, it would take it to $400,000. So it's like numbers sort of kind of get crazy. Now, your other question was about volatility, and you know, how can we use Bitcoin as money if it's so volatile? Mm-hmm. Now, that question has embedded within it sort of a subtle assumption, which is for paying for something, right? Like this is to go and, you know, buy a car or something like that. Now, there are solutions to those, but I want to sort of challenge that assumption a little bit, because the main use case for money is actually storing value across time and not for transacting or paying for something. Okay, so by that, what I mean is you want the ability to make sure that you store the value that you've earned through your labor or for services or goods that you created or whatever to last. And that is the key to what money's real function is. I mean, one of the other functions is to be able to trade it later and so on. But the ability to save is a critical component of it. And that's something that the dollar no longer really has. If you look at the dollar from, even like 10 years ago, it's diluted significantly. And, the prices of like something like pro sports teams has gone astronomical, right? So you could tell that the dollar isn't worth as much as it used to be. So anyone that has any money, they spend a tremendous amount of time and energy into making sure that they keep the money that they have. This is what they call investing. And if you're like super rich, right, like Rockefellers or something, what you end up doing is you have something called a family office. And these are people that you hire, entire office of people that you hire just to have them invest your money to make sure that it doesn't degrade over time. Because if they know that if they keep it in dollars, it's going to degrade. And their wealth is not going to be preserved. So they hire lots of people to do that. So the fact that as an economy, you have family offices, you have investment professionals, you have all sorts of people like that are investing in things that they don't understand just so they can, possibly keep up the money that they've earned and so on. And of course, there's a fair bit of, degenerate gambling in there as well. But essentially, there's a lot of people that spend a tremendous amount of time trying to preserve their money, to store their value. This is where Bitcoin shines because it is way better than almost everything else in that store of value function. It's way better than the dollar because it doesn't degrade. It's way better than something like real estate because it's much harder to tax. Real estate is very easy to tax because they know where you live, right? They could just say, unless you pay us this money, we're gonna kick you out of the house. Yeah, so they kind of have, they can kind of force that. Plus, it has like huge transaction costs, right? Every time you sell a house, there's like
people you got to pay along the way. There's a lot of middlemen in the process.
A ton of middlemen, and they entire billionaires are made from like these real estate professionals that have figured out how to be in the middle of these transactions. And then you have something like stock, which is really supposed to be like investment in some future cash flows of a company or something like that. But it's turned into this giant game of we're it's not about the cash flows or the revenue of the company anymore. It's about like how much other people sort of trust this company to keep its value and not like completely go stupid. So that is the situation we're in. Bitcoin is way more fungible than those, and that just means that 1 unit of Bitcoin is as good as any other one. Try doing that with real estate. Corner lot is way better than the one like that's next door. One stock is way different than another. Even gold bars, like some of them are 99.99% pure, other ones are 99% pure. Even $100 bills, and this is kind of funny. You would think are exactly the same, trading. Actually, in third world countries, a crisp $100 bill will trade at about a 20% premium to a crumpled one. Do you want to know why?
It looks better.
Yeah. That's basically it. Because people gift each other $100 bills at weddings and stuff. And if you're gifting it to somebody, you want it to be nice and crisp and clean. So like they'll as one of like the things that you bring to a gift at a wedding is like a nice crisp $100 bill, and they'll present it to the bride and groom, and that'll be like their store of value. That's how crappy those stores of value are. If you think like the U.S. dollar sucks, I mean, go to Jakarta or like
I'm
Turkey
from Nigeria, and I know that the way that system is bad. It's extremely bad. The way it just fluctuates and the price just keeps on making the naira worth less and less and less, and that's a whole thing. So I definitely understand
and the people in Nigeria love the dollar for that reason. Because it's way better than the naira, right?
Yeah.
I hope you enjoyed that little snippet of the Rambling Mind podcast. If you want more of the Rambling Mind podcast, or if you want to listen to the whole episode that you just heard, Go check it out on any podcast listening platform, whether that be Anchor, Spotify, Google Podcast, Apple Podcast, Breaker, Stitcher. I could go on, but you guys already know which podcast you love to use to listen to. So go check it out. Link down in the description as well. I'm gonna catch y'all later. Peace.